Bitcoin is burning. That is the warning issued by a group of developers after Chinese artificial intelligence uncovered thousands of potential problems across the crypto ecosystem. Meanwhile, talk that crypto is dead has once again started spreading across social media, but history shows that this kind of fear sometimes emerges right around the market's most interesting moments. Chainlink has also flashed a rare signal that has been followed by major rallies in the past, while some analysts believe the ideal time to buy Ethereum is right now. Are we really on the verge of a major awakening, or are we once again seeing light at the end of the tunnel that turns out to be an approaching train? That is what we'll break down in today's episode. Support us with a like and a comment, subscribe if you haven't already, and let's get started. We begin with the rather alarming claim that Bitcoin is burning. Don't worry, the blockchain hasn't caught fire and Satoshi hasn't suddenly appeared with a fire extinguisher. The warning comes from Bitcoin Red Team, a volunteer group that combines artificial intelligence with human review to search for vulnerabilities in wallets, Lightning applications, software and other projects around the Bitcoin ecosystem. The team uses Kimi K3, a Chinese AI model developed by Moonshot AI that can analyze massive amounts of code and perform lengthy tasks with relatively little human involvement. It has also used GLM 5.2 from Chinese company ZAI, along with tools developed by OpenAI and Anthropic. According to the group's leader, who is famous as Calais, American models frequently impose restrictions on this type of cybersecurity research. In simple terms, the good guys want to find the holes before the bad guys do, but artificial intelligence sometimes tells them, "You're not allowed in here." That is why the group has turned heavily toward Chinese models, and the results are alarming, to say the least. In August alone, the team submitted almost 5,000 reports covering potential problems across 390 projects. Of these, 85 were classified as critical and another 635 as high severity. Developers have already confirmed numerous genuine vulnerabilities, but the names of the affected projects and the technical details have not been disclosed to avoid handing hackers a ready-made instruction manual. Lightning applications proved particularly difficult to examine due to their complexity, and responses from different development teams varied significantly. Some reacted immediately, whereas others were apparently operating in "we'll look at it next week" mode. Calais warned that unmaintained projects should not be considered safe simply because they are associated with Bitcoin. The news sounds pretty bad, but there is a positive side. These findings do not mean that the Bitcoin blockchain itself has been compromised. They involve the broader software ecosystem built around it. The more problems the good guys discover and fix now, the harder it will be for real attackers to exploit them later. Or, as the saying goes, sometimes something needs to smell slightly burned before we finally check where the fire is coming from. Moving on to sentiment across the crypto community, which is gloomy, to put it mildly. Analytics platform Sentiment has noticed that phrases such as "crypto is dead," "it's all over," "crypto is dying," and "the end is here" are being used increasingly often across X, Reddit, Telegram and other social platforms. This is the typical language of fear. It usually begins to spread when prices remain stagnant or continue falling for an extended period. Retail investors run out of patience, and every temporary period of weakness starts to look like the permanent end of the entire industry. Some people sell, others stop following the market altogether. A third group declares that they will never touch crypto again. At least until the next green wave arrives, of course. Here is where things become interesting. The crypto market has the unpleasant habit of moving against the majority precisely when everyone becomes overly convinced about the same scenario. When euphoria takes over and everybody expects a new all-time high within days, a painful slap often follows. But when everyone decides the sector is finished and will never recover, the potential opportunity gradually becomes more interesting. Sentiment believes the growing amount of crypto is dead chatter shows that retail investors are beginning to lose patience. If Bitcoin continues holding important price levels at the same time, forced sellers start disappearing and large investors keep accumulating, conditions may become much more attractive for patient buyers. Of course, this is not some magical signal proving that the bottom is definitely in and every cryptocurrency will jump by 50% tomorrow. Social sentiment can remain negative for a long time, while prices may continue moving lower. But when fear becomes overwhelmingly one-sided, it is at least worth stopping to ask whether the crowd has once again arrived late to the party. Tell us in the comments, do you believe crypto is genuinely dying, or is it simply playing its favorite role once again, the phoenix that first has to burn through all of our nerves? Now let's talk about Chainlink, because a rare signal has appeared there and it definitely deserves some attention. Link gained around 10% in a week and reached approximately $80.85, while analyst Ali Martinez identified what is known as an MVRV golden cross. MVRV compares a cryptocurrency's market value with the average price at which its coins were last moved. In simpler terms, the indicator helps us understand whether market participants are genuinely sitting on profits or losses. The golden cross appears when the MVRV ratio moves above its 200-day moving average. Chainlink had not produced this signal for more than a year. What makes it even more interesting is what happened after its previous appearances. In November 2024, Link surged by 155%, while the signal recorded in July last year was followed by another rally of approximately 85%. If history repeats itself, Chainlink holders may finally have something to celebrate following the prolonged and extremely painful decline. Before we open the champagne though, there are several major obstacles. The first serious resistance zone is around $9, which Link needs to break decisively. If it succeeds, the next potential targets sit around $9.50, $10 and even approximately $10.80. Whales have also started buying, adding another positive element to the bullish picture. On the other side, we have some far less encouraging data. Network activity has declined significantly, the number of transactions has fallen by more than 90%, and active users have dropped from approximately 2,700 to around 1,000. Trading volume and open interest are not showing any explosive confidence either. We finished today's episode with Ethereum, which is once again making investors ask the eternal question: is this the perfect price to buy, or will an even more perfect and considerably lower price appear tomorrow? The second largest cryptocurrency is currently trading at around $1,880 and has lost approximately 60% over the past year. The psychologically important $2,000 level has not been reached since the beginning of June, which explains why much of the market continues waiting for definitive confirmation that the bottom is already behind us. According to Michael van de Poppe, however, that perfect confirmation never arrives. The analyst believes the right time to begin gradually building a position is now, as markets often make buying at low prices feel uncomfortable and risky. If everyone felt completely relaxed and convinced that a rally was coming, the price probably wouldn't still be sitting at 1,880. Van de Poppe noted that previous Ethereum breakouts have produced gains of around 60% in less than a week. He believes a similar move could occur in the coming months, potentially pushing it to $3,000 within days or weeks. According to him, Ethereum's trading range continues to tighten, suggesting that a major volatile move may be approaching. Ali Martinez also sees $3,000 as a possible target and believes the decline to $1,580 in June could serve as a launchpad for a future recovery. Another analyst, Gerla, goes considerably further, predicting a new all-time high of above $10,000. At least for now, that is one of those forecasts that sound slightly unrealistic. The bullish thesis is also supported by several fundamental factors. Large investors holding between 10,000 and 100,000 ETH, along with the so-called mega whales, have been accumulating since mid-2025, while smaller market participants have been selling. The amount of Ethereum stored on exchanges also remains close to a 10-year low, meaning fewer coins are readily available for immediate sale. Since the beginning of July, spot Ethereum ETFs have also recorded substantial inflows. The combination looks promising, but risk remains the key word. Ethereum first needs to reclaim $2,000 and prove that it can remain above that level. Until then, the current price may represent a great opportunity for long-term optimists, but it could also become another trap for anyone expecting easy and immediate profits. That's all for today, folks. Have a fantastic weekend, and we'll see you again soon.